Welcome everyone to today's ANX Metals Limited Investor Briefing webinar. It's a pleasure to have you with us. My name is Lucas Robinson from Investor Relations Consultancy Corporate Storytime. ANX Metals Limited is advancing the fully permitted WhimCreek Copper-Zinc project in the Pilbara region of Western Australia. ANX recently released an updated definitive feasibility study which delivered robust economic outcomes from a planned restart of the WhimCreek base and precious metals mine. I'm delighted today to be joined by Geoff Laing, Managing Director of ANX Metals. Geoff will be walking us through the WhimCreek DFS and the company's plans to become a capital-light, first-mover Australian copper producer. Following Geoff's presentation, we'll open the floor for a Q&A session. You're welcome to submit your questions at any time during the webinar via the Q&A function at the bottom of your screen. Despite there being several dozen registrations for this webinar, we have not received any questions in advance, which may indicate that we've got some glitch. So if you have sent a question via email, please do so again via the Q&A webinar function. If we're unable to address your question during the session, we'll follow up with responses after the webinar. So I'm pleased to hand over to you, Geoff. I believe you're going to share your screen with a presentation.
Welcome to everyone. Welcome from a rather stormy and wet Perth this morning. Very pleased to have the opportunity to tell you more about the updated feasibility study, which we put out 2 days ago, and which demonstrated just how robust and economically attractive the project is. But before I get into the details of that, for those of you that are listening to the ANX story for the first time, we're a listed company. We're based in Perth, and you can see on the map here our asset is up in the northwest Pilbara, located between Karratha and Port Hedland. Our vision, and we've had a very well mapped out strategy for many years now. Our vision is to become a substantial copper producer in the Pilbara and to develop a scalable business. The strategy that we plan to use to roll that out is to develop our own flagship asset, WhimCreek, which will then provide the platform for growth within the Pilbara region. And I'll go into that in a little bit more, or quite a lot more detail actually. But before I do that, I'd just like to make some comments about the copper market generally, because that's our strategy has been formed around how we see the copper market, and particularly the supply side issues in the copper market sort of influencing the future. So as everyone's well aware, the copper market is a mature market, and there's significant supply side pressures within the market. The industry's, I guess, sort of response to those supply side pressures is generally to chase projects with economies of scale, which sort of almost by definition means that low-grade projects with declining grades that require significant processing infrastructure, mining infrastructure, tailings dams, etc. And this sort of economies of scale model is often at odds with the direction of the permitting and approvals and the social license required to operate. So you've got these two sort of conflicting, diametrically opposed forces, and we've seen that as an opportunity really, because there are many smaller, high-grade assets still out there, and we're obviously not the only ones looking at this, but we see that there's a very significant opportunity in developing a smaller asset, high grade, high margin, and then having that as a platform to then aggregate other assets around it and get the scale through that process. So that's always been front of mind for us as we've gone through the development of WhimCreek. And we see that as really addressing some of the issues that these larger, lower grade projects will have in terms of getting into production. And, I think just as a final comment on that, the market is finding it very hard to understand the risk of permitting, and that, there will be many projects out there that, may not even get into production just because of the headwinds in terms of the permitting, etc. So That's formed our strategy, and now I'll talk a little bit about WhimCreek, and then we'll come back to the consolidation. So we completed a definitive feasibility study. Well, I'll just take a step back. For those that are new to ANX, we acquired WhimCreek in 2021. We acquired an 80% interest from Develop. It was VentureX back in the day. And from that time, we have done a lot of work on site. We've got it fully permitted. We completed a DFS in 2023. And that DFS demonstrated a project that was very robust, technically robust, economically attractive. Roll on 2.5, 3 years to 2026. And we've now taken that definitive feasibility study and we've updated it. The technical aspects of the feasibility study are all pretty much exactly as they were back in 2023. There has been an update to Evelyn, which is our smallest reserve, but that's not significant in the scheme of things. So essentially what we've got is the 2023 DFS from a technical perspective, but with 2026 operating costs, capital costs, and of course metal prices. And the outcome of this update has been extremely pleasing. Essentially what we've seen is that the economic metrics have doubled. The free cash flow is now up above 700 million. We've got an NPV of just over $500 million and an IRR of 100%. And that's all using a flat copper price of 11,500. If you step that up to spot pricing, the free cash flows jump up to just over 900 million and an NPV of about 600 million. And as we explained back in the day in 2023, this project is highly leveraged to these prices. So for those who feel that the supply side pressures will continue on and the copper price will continue upwards, we could easily see WhimCreek generating cash flows in excess of $1 billion. And I'll explain some of the upside as well, which will certainly see us generating north of $1 billion. So the project's got a 10-year mine life. We'll be producing about 13 kiloton a year of copper equivalent, and that'll be produced from a reserve of 4.6 million tons, grading about 2.7% copper. So in fact, we've got a reserve of 4.6 million tons with a mining inventory of about 5 million tons at a copper equivalent of 2.7. And those come out of a global resource base of 11 million tons, which is grading about 2% copper equivalent. Importantly, the capital cost and development cost is incredibly attractive, $91 million to get into production. And I'll go through in some detail how we have such an attractive development cost. So that's made up of 77 million in pre-production capex and 14 million in working capital. And at the 11,500 copper price, we've got a payback on that full 91 million of just 14 months. So incredibly rapid payback, very attractive all-up cost. And ANX's contribution to the all-up development is 76 million. And that's on the 80% basis that we control. So I'll make the point now, and I'll make it a few times through this presentation, that we are the only fully permitted development-ready project in the Western Pilbara, capable of treating both sulfides and oxides. And I'll elaborate on that as we step through the presentation. So I'm not going to go through blow by blow all of the outcomes of the DFS. I've been through the sort of headline terms. On this slide, I just want to talk a little bit to the drone image here. We're looking down on the Monkapri oxide pit. So WhimCreek was developed back in 2003 by Straits Resources. They mined the Monkapri pit, and we'll have a look at the WhimCreek pit in a second. They developed all the infrastructure that we have inherited, and they produced about 70 kilotons of high-grade copper cathode from the oxide ore only. So they mined oxides. At WhimCreek now, we've got all of the oxides and transitional material has been depleted by Straits. that's all been processed on the heap, and all we've got is the sulfides, which is our main focus. And the sulfides plunge down to the left. If you're having a look at this image here, they plunge down. So we'll have a much larger sulfide pit that will sort of sit underneath where the writing is in this slide. I do want to dwell a little bit about on the capital intensity. So this slide, we're looking at this is a drone image looking over our processing infrastructure. And again, this is what Straits built back in 2003. So when we acquired the project, we inherited a substantial infrastructure. And this is an important part of us being able to deliver very good capital intensity. So what does this capital intensity mean? 4,000 US per annual ton. This is absolute best in class. So I guess the global average at the moment is probably somewhere north of 15,000 US per ton. And this just relates directly to the 91 million that it's going to cost us to bring this project into production. We're able to deliver it with such attractive capital intensity for a few reasons. One, the infrastructure that we've got. Two, we've got high-grade reserves, 2.7% copper equivalent. If you think the global average is probably below 0.5% now, this means that we can squeeze more metal units through the same processing infrastructure just by virtue of the higher grade ore. On top of that, we're using pre-concentration. So we're taking high-grade ores, and then we're stripping out all of the mining dilution, all of the low-grade material. We can put the low-grade material on the side to come back to, and we're making sure that we only process the economic and the high-grade ore. And then another key element is in-pit tailings. We've got permitting to put the tailings into the historic oxide pits. And this is a huge benefit. We don't have to build a tailings dam. We don't have to maintain a tailings dam. It all just goes into a pit. So when you factor all of that together, it's a highly attractive development cost, and hence the 4,000 per US per ton. In addition to that, we've got a very attractive all-in sustaining cost of US 161 per pound. And this is on the back of great byproduct credits. So we've got, as byproducts, we've got zinc, we've got silver, and we've also got some gold and a bit of lead. So incredibly favorable all-in sustaining costs and development costs. And then I'll talk a bit more about the infrastructure that services. So the regional infrastructure, absolute, globally some of the best infrastructure that we've got in the Pilbara, and we sit right in the sort of the central part between Port Hedland and Karratha. So having completed the updated DFS, we now look forward to the upside. We've got some immediate aspects that we can deal with that will bring further upside into what I've already presented. And I'll just step through the key ones of these. So we plan to estimate the reserves. When we originally did the reserves back in 2022, we were using copper prices of around about $8,700, $9,000 a ton. We will re-estimate them using a more reasonable copper price, and we expect that there will be quite significant growth. We could see north of 20% perhaps on the reserves. And on the back of that, we plan to look at a slightly larger processing plant. So we plan to potentially go from 400 kiloton per annum up to 500 kiloton per annum. The upshot of that is that we'll produce more metal units. So, we'll probably punch through the 15 kiloton a year of copper equivalent. And that's immediately available to us. That's upside that's there. We'll also be looking at the mining side of things and optimizing. Obviously, by far our largest cost is the mining cost. And so there's some optimization that can be done there in terms of fleets. We also since we did the feasibility study, the precious metal prices have obviously gone up dramatically. I mean, copper's gone up very nicely, but precious metals have gone up significantly. And we are now going back and having a look at where there is upside. And one of the areas is there's a fair bit of leakage of the precious metals which go out in the pyrite. And I expect that we will look to recover those. And there could be, we're letting go of 1.1 million ounces of silver, for example, in that in the pyrite tails. There's now a very substantial growing market for pyrite concentrates, so we'll look to recover pyrite concentrates. Extensional drilling at Salt Creek, I'll deal with that separately, so we'll come to that. There's, in addition to the reserve growth that I talked about, we've got also resource growth immediately available, both at Salt Creek and Evelyn. And Salt Creek is the main focus for us. An update on the heap leach study. So we completed a study on heap leaching the low-grade material. Now, we're able to, through our pre-concentration, we extract the high-grade material to go through the concentrator, and the low-grade material will separate out. We put onto the existing heap. So we've got this opportunity to leach that low-grade material. We have developed in-house our own bioleaching technology, which is immensely valuable. I think that the market as yet hasn't recognized the value in this technology. For us at WhimCreek, it adds some incremental upside. The study showed that we could generate somewhere around 70 million in free cash from just the low-grade ore. But this technology can be used and applied to transitional ores that we plan to bring in from satellite pits. And it'll really enhance the profitability of some of these ore bodies that we can apply this technology to. The regional consolidation I'll deal with on a separate slide. And then, of course, we are fortunate to have had Gold Valley acquire the Bala Bala magnetite titanium vanadium project right next door to us, and to become our largest shareholder late last year. So we'll be working with Gold Valley, working on synergies to, as we jointly, although separately, develop our projects, jointly working on shared infrastructure. And I think that there's some huge opportunities there, camps and other infrastructure that we can share. Okay, so the all-important question about project funding. Obviously, now having completed this updated DFS, the focus has been on project funding, but now we're better placed than ever to secure the funding for the project, and the focus remains on the debt funding aspects of it, and we believe that the equity funding will then bolt onto the back of that. We've got a number of live discussions. I obviously can't go into the details of any of those, but we have made it clear that we have some non-binding offers of up to just under 60 million Australian in debt funding that would likely be linked to the offtake. That equates to 75% of our all-in development cost. That's the ANX portion of the all-in development cost, which is $76 million. So we can do a substantial amount of our portion of it in through debt funding. That's a great outcome for us. So this is very much live activity for us, and obviously we'll look forward to updating the market as soon as we can on the debt funding. So here we talk about the benefits of consolidation. As I started off with, WhimCreek is the platform for growth, and the Pilbara region, although better recognized for iron ore and lithium and probably gold more recently, it is quite a well-endowed region from a base metal perspective. These tenements, the grey and orange tenements, are our tenements, which you could see on the Northwest Highway between Karratha and Port Hedland. We sit ideally in amongst 9 other deposits in our region that we believe ultimately could in some way benefit from being processed either through our concentrator or our planned concentrator or on our heap. As I pointed out before, we are the only permitted heap facility in our region, and almost without exception, the deposits around us on this map have some level of oxide and transitional ore that would benefit from being processed at WhimCreek. So there's a huge opportunity here. And this consolidation, we're watching in live time happen in the gold space. We're seeing that on the back of the sort of meteoric rise in the gold price, we're seeing consolidation in various regions in the gold space. You're not seeing lots of new gold processing plants being built. You're seeing existing plants taking control, people with existing infrastructure being able to control the region around them and consolidating, bringing in material from satellite deposits. We've seen less of it in the base metal space, but it's certainly coming. And, more recently, we are seeing some activity in the Cobar region, up in the Cloncurry region, and we see that the Pilbara region is absolutely ripe for this consolidation phase. Just to give you a sense, this region, the assets that we've got on this map are endowed with about 500,000 tons of copper, just over 1 million tons of zinc. So there's plenty of metal in the region. And, we feel that even if a percentage of that went into processing in WhimCreek over and above what we're doing from our own assets, that could easily see us up at a 25 to 30 kiloton per annum processing hub. So I'm not going to go through further details on the project other than we've looked at this drone image before. This is just important for me just to step through the infrastructure that we have got there. So in addition to the pits that we've looked at, we've got the haul roads, we've got ROM pads, we've got workshops, offices, all fully functional. We've got a team on site that maintains site. You can see that there's been a lot of work done on the on the heap leach infrastructure, the ponds. We had to remediate all of that to get it permitted. We've got a powerhouse. And so all of the basic infrastructure is there ready for us to refurbish the crushing plant, put in the pre-concentration plant, build a very modest sized concentrator, mill, flotation plant. And, we believe that with all of this in place, ready to go, we can develop and get the project into production in 18 months from FID. So we really hit the ground running with what we've got. And, we believe that we've got in excess of $40 million of infrastructure available to us. Just very briefly on the process side of things, when you've got a polymetallic asset, the metallurgy is absolutely critical. And from a WhimCreek perspective, we've been very focused on this. We believe we've developed a very robust flow sheet. And the key elements of the flow sheet are obviously the open pit mining to start off with. Then we've got pre-concentration. We've got a stock standard concentrator, which has been designed by Gecko Systems, a very well-known engineering company. And then we've got a separate catch-all sort of system where the low-grade material that's taken out in the pre-concentration process is then put onto the heap, which is already there, and we bio-leach the metals, all for upside. So it's really a belts and braces process. We're able to decouple the mining from the concentrator. This allows us to mine at a far higher rate than we're processing at, which allows the pre-concentration to ensure that we're getting the concentrator full of high-grade ore all the time, and you get the maximum benefit of metal units going through that plant. We've put a lot of thought into this, and we believe that we've got a great flow sheet and a very robust starting point, especially with the open pit mining. The rest of the project metrics I'll leave for you to go through at your leisure. A little bit on the schedule going ahead. So we've already kicked off the optimization works that I talked about. We're looking at upgrading the reserves. We'll kick off works looking at an increased concentrator size. We're clearly working very hard on the debt aspects, so a real focus on that, and the equity will sort of follow in hopefully rapidly behind that, and obviously now sort of chasing down an FID and into development in the second half of this year. Regional consolidation, we've already done a lot of work. We've identified those assets that we think would fit best early on in the process. We've got to understand them pretty well. And once we've got our debt funding and equity funding in place, we can progress to the next stage in terms of what transactions could potentially look like. Exploration at Salt Creek. So we've got great upside just in resource growth on the assets that we've got. And I'll just use this opportunity just very briefly. I'm almost done now on this, but this is an expanded view of our tenure overlain on the regional geology. You can see the greenstone belt. Our tenure covers the greenstone belt, which is prospective for the base metals. We've got 4 deposits: Monkapri, WhimCreek, and then to the north, Salt Creek, and to the south, Evelyn. Salt Creek is a very high-grade asset that'll be mined as an underground, as is Evelyn. And I've mentioned previously that there's upside resource growth at Salt Creek. So that's a primary focus for us. I'll just jump to the Salt Creek cartoon here, which is what the mine development will look like. And I just want to highlight that we expect this has only been drilled 400 meters vertically down. These VMS deposits can easily go down to 1 kilometer. We see that Golden Grove is a good example. So it's only drilled to 400. We've got it's open at depth along strike. There's 200 meters of strike that it's open. There's 2 lenses. There's a west lens, which is more zinc dominant. It is in the eastern lens is becoming much more copper dominant. And the last hole that went in there was just under 20 meters at 2.5% copper. And so we look forward we'll put out an exploration target probably in the next month. And we look forward to being able to grow that in addition to lots of other exciting regional exploration growth, which I won't go into now. So I might stop it there. That's obviously, I've run through the key elements. The key focus, obviously, for us is the fantastic numbers that have come out of the updated DFS. That's sort of really given us a head of steam to move ahead with debt funding now moving ahead. And we look forward to getting into develop the brownfields infrastructure that we've got.
Thanks very much, Geoff. Launch into Q&A. There's a reference to potential offtake and project financing within the DFS update. Can you provide a timeline on the likely completion for these negotiations?
Thanks, Lucas. So those, as I mentioned before, those negotiations are currently ongoing. We're assessing. We have had a number of offers. So we are assessing the offers without putting a specific date to having it done by. We are aiming to have the debt and equity funding done within this side of the mid-year, and then sort of moving to an FID and into development in the second half of this year.
Thanks, Geoff. We've had a question in relation to your joint venture partner. How are you able to maximise Develop Global's mining and company building expertise?
That's a good question. So we will be developing 2 underground mines, one at Salt Creek and one at Evelyn. And those will be developed in the second half of the project. So I've mentioned we've got a 10-year project life. So the development of those will happen to around about year 4, or the initial development. So, while it's not a primary focus at the moment, obviously develop our specialist underground miners, and there could be an obvious synergy there. We are currently very focused on the open pit side of things because that's where it all starts. But we will look forward to getting all the benefit we could extract down the track, if when we get to that point.
Excellent. Well, it must have been a very comprehensive presentation, Geoff, because we haven't received too many questions either before or during the session. Thank you for that, and congratulations on the progress that the company's made. If you have any further questions, please feel free to email us at info@corporatestorytime.com. And Geoff, before we close, would you like to share any final comments?
Thanks, Lucas. I'd just like to say thanks very much to everyone. It's been quite a journey to get to this point. It's never easy moving from I guess the development stage or into the development stage and getting funding in place. But we feel like we've sort of really turned a corner. The metal markets are looking incredibly robust. We've got a great suite of metals, so it's copper and silver with some gold, and then a bit of zinc a fair bit of zinc and lead. So we're perfectly positioned in terms of the suite of products, and I think that we really are well positioned to become a producer and one of very few potential producers in Australia in the near future. And we just really look forward to keeping the market up to date on our progress, and sort of feeling like we've got a head of steam up now. So thank you very much.
That was a great and comprehensive update, and it concludes our webinar today. A recording will be available shortly of the webinar and shared both through the ANX Metals and Corporate Storytime social media channels. And on behalf of ANX Metals and Corporate Storytime, thank you to all of the attendees for joining us. Thank you to Geoff for running us through the updated DFS at WhimCreek, and we look forward to welcoming you on our next investor briefing. Enjoy the rest of your day.